Welcome to Inside the Vault. I'm your host, Mark Yaxley. I'm joined today by one of the biggest names in the precious metal space, analyst and author of the Morgan Report, Mr. David Morgan. I first met David back in 2006, and I've been following his work ever since. We sat down recently to discuss the state of the markets and his outlook for the precious metals and mining stocks. David, welcome to Inside the Vault. We're very happy to have you here with us today. Looking forward to hearing your thoughts.
Well, Mark, thanks for having me here.
Great. David, we saw recently the Fed cut rates again after a disastrous week for the equity markets. Initially, the market reacted positively, and then they were down in the next trading session. We're seeing a ton of volatility right now, including for the precious metals. From a macro perspective, where do we stand right now, in your opinion, David?
Well, I think we're getting to the end. And what does the end mean? It means that the policies that have worked in the past don't work anymore. I'm going to use an aircraft analogy, and I don't want to lose anybody. So if you don't understand what I'm saying, just Google it or look at Bing. It's called the backside of the power curve. And what it relates to is flying. Prop airplane is also true in a jet. But what happens is you get behind the power curve. What does that mean? It means that you've got the nose too high and you're stalling the airplane. And no matter how much power you add, you can't get out of the stall. You're going down. That's the backside of the power curve. You've got all this, extra thrust or extra power available, but even pushing it all the way to the wall isn't going to solve the problem. And I think that's a good analogy. I mean, most people thought maybe a quarter basis point. It turned out to be a half, and really nothing happened. The ship's going down is a metaphor. So I hate to be Mr. Doom and Gloom. I don't really think I am. I think I'm a realist. I mean, from the day I started and got an internet presence and spoke the truth about the financial system at large, and then zeroed down into the precious metals and the resource sector. I've been tried my best from all the study and work I've done for so many years to just tell it like it is. So, Mark, that's my answer. I think we might get another bounce. The market's used to getting juiced, and they might do another rate cut here in a couple of weeks. A lot of people are saying that could happen. Will it help? Yeah, maybe for a little while. I mean, even when you firewall it and you throw all the power you've got left, there's something in you that tells you this will work. And it doesn't, because again, you're behind the power curve, which means no matter how much power you have, it's just not going to fix the problem. So,
I really like the analogy, actually, David. It makes a lot of sense in my mind. And what are some of the indicators that you're watching, things that you're most concerned about that makes you sure that we've now reached this backside of the power curve?
Well, from a technical perspective, I'm very simple. I mean, I've been through, so many classes and options courses and whatever, but I've broken it down now into price and volume technically. I mean, basically, it's all price and volume. So that's from a technical. On the fundamental side, you can almost get, paralysis by analysis. I mean, there's so much information out there. It's really hard to listen to it all. We go back a decade, and by myself and my small staff, I felt I was pretty much on top of everything. Now I just feel no matter how much time I devote, I might miss something, and whatever. But the point I still try to keep it simple. So I look at what the governments of the world are saying, particularly the central bankers and the bankers bank. What is the IMF and the World Bank saying? What our nation states proxies saying, their leaders that are usually ex-bankers and that type of thing. So I pay attention to that. Usually whatever they say, I take with a huge grain of salt, and usually think it's going to be the opposite. So that's kind of where I look at the fundamental side, but I use them both. I think the charts don't lie, manipulated or not. Basically all the markets are manipulated. I mean, I gave a lecture in Vancouver years ago, and if you manipulate interest rates, you manipulate everything, because everything is based on the price of money. And if the price of money can't be determined by the free market, then what is the true price? The answer is we don't know, and we haven't for a very long time. So back to you, Mark.
Yeah, I mean, one thing I wanted to ask you, David, you touched on the central banks, and that's one of the the places where you pay attention to? I know you speak to a lot of investors, just like I do, normal people, Main Street investors. What do you think their sentiment is right now? What are you hearing from your followers?
They're concerned that the mining equities, the resource equities, aren't keeping up with the metal. And I think there's a couple reasons. One is the virus uncertainty. What does that mean? Plus, in any correction or more of a big sell-off like we're experiencing in the general equity market, the miners and resource companies, basically everything goes down in sympathy. And then gold can actually take off, go higher, and then the miners catch up. So I don't think it's abnormal to see, but it does concern people because there's leverage in the mining shares most of the time. There are certain times where gold by itself actually outperforms a good gold stock, as an example. But those are rare. When they do happen, that's not the part of the cycle that we're in right now. But it'll take a while back and forth. And, gold's going up because of uncertainty in the marketplace. And the more uncertain things become, the bigger the run to gold will become. And the more that's established, it'll build its own momentum. And then the next in line will be like your top tier gold and silver companies, primarily gold. And they'll move. And then they'll start bringing up the intermediates. And then after a while, things are, full steam ahead, so to speak, you'll see the juniors start to partake. So that's the way the cycle should or could unfold. Most likely will unfold this next few years. And I'm looking for a big paradigm shift. I think this is it finally, meaning that equities down, gold up. And that's going to be the major trends.
Yeah, I definitely agree. That will be the next trend. I said about 6 months ago, I thought we were in the early stages of the next bull market for precious metals. And I feel more certain about that claim than ever. Sticking to the miners for a second, you mentioned in an interview I watched you do with Daniela Cambone from Kitco recently that specifically, I think you were speaking about the silver miners are still not economical, was the term you used. Where do you think the silver price has to be for those silver miners to become economical, where your followers, the investors, are going to start to see some more positive returns?
Yeah, I'm trying to remember exactly. I mean, there are some that are barely economic, but there's a report in the members section of the Morgan report called Archie's Rule. And it's a rule of thumb. It's a asymptotic curve, if you know what that means. But basically, the bottom line is pretty simple. If you are a miner of copper or iron ore or silver or whatever, you really need, for the long-term prosperity of the company and your shareholders, to be at 2x. What is X? X is what your all-in sustaining costs are. So if your all-in sustaining costs are $10 an ounce for silver, you need a $20 silver price to have a really viable business. So, well, geez, David, that's twice as much as you're mining it for, all-in costs. Yes, it is, and that's what you need. Let me explain a little further. Miners, the best mine in the world ends in failure. I mean, when you take that last ounce of gold out of that gold mine, it's done. So you've always got to replace your reserves if that's your business, which means exploration, mergers and acquisitions, and everything else that goes along with it. Plus, there's variables like what's the cost of energy, what's the cost of labor, what's the tax rate. I mean, all these variables. So that's the answer. And I like that rule of thumb. So a lot of people that become members of the Morgan Report, I ask them to read how to use the Morgan Report, and then I like to direct them to that. It's only about a 3-page paper on Archie's Rule because a lot of people have the idea of a cash cost, and the cash cost is equal to the all-in sustaining cost. They're not even close. But there's these metaphors or these the vocabulary of the business you have to understand, like any business, like engineering or accounting or whatever exercise. I mean, everyone has their own certain language around their subject matter, and it's the same in the resource world. And if you don't understand the language as an investor, you may make a mistake that you might not have made if you understand the language.
So first step, educate yourself, become comfortable with the lingo, read something like the Morgan Report, to get that education. David, I wanted to stick to silver for a second, shifting maybe away from the miners, more onto the investment bullion side. I think anyone who has ever come across David Morgan knows that you like silver. And, you've been a proponent of owning silver for as long as I can remember. And that dates back to 2006, 2007 when I first met you. Why do you like silver so much?
Yeah. Well, the answer is because of the study I put into it. I mean, when I got interested in, money, which was at a very early age, and started to look into it and study on my own and read books and follow newsletter writers and go to conferences and all of that, I pretty much was gold. And then after the Hunt situation, I asked the question, why silver? Why would they, and of course they were into gold as well, but obviously they were very, very interested in the silver market. So that's when I did a deep dive in the answer to that question. Why did they favor silver over gold? And when I found out what everyone, that's even done a cursory look at silver now knows, but the properties of silver, and that's, the electrical conductivity, the reflectivity, the acoustic quality, and everything that goes along with it in the industrial realm, that it became very interesting from that aspect. And really, the monetary aspect is actually a more interesting study than gold, because silver's been used more places for more transaction as money than gold ever has. I mean, gold was international settlements, king to king, nation state to nation state, balance of payments, that type of thing. And yeah, there were gold transactions done on the street hand to hand. I'm not saying there wasn't, but most of the on the street transactions hand to hand were actually done in silver, not in gold. So it was very interesting. And I got the idea after that study that there was a lot of reasons why silver had basically this double bang, which means that you've got the industrial side and the monetary side. On the industrial side, which is fascinating, was it's price inelastic in most applications. So if you're going to buy a new refrigerator freezer with internet connection, it's going to tell your store you need more milk, or send it to your smartphone. And that refrigerator freezer is, I'm going to make up a number because I don't even know what they cost, but say it's $4,500. The amount of silver in that is maybe $8, $10. So if silver went from the current price of, let's say, 17 to 170, that $8 would go all the way up to 80, which is still a small fraction of what that refrigerator freezer costs. And so that's price inelastic, because they'll use copper everywhere they can, but there's certain, like the membrane touchscreen has to be done in silver. So you can't, substitute it. Well, you could use palladium, but why would you substitute, $17 an ounce for something that's $2,400 an ounce, right?
Right. Yeah.
So there you are. It's price inelastic in most cases, not in all. Of course, it's price elastic on the jewelry side and silverware side, but on electronic side, in almost all cases, it's not. So no matter how high the price goes, it has to be obtained. And it doesn't change the overall price of the end product hardly at all. Although use it as an excuse. I mean, the solar panel developer, which really a solar panel doesn't even use that much silver per panel, but everyone knows that they take silver, so they'll use it as an excuse. But if you actually did the arithmetic, as I just outlined, you'll find it, wait a minute, you're jacking up the price 80, you're jacking up the price, this many percent, when the silver only adds 0.02% to the overall cost now, or whatever.
Yeah. So, and I think that's really interesting. We talk about that in season 2 of Inside the Vault, the number of industrial uses and the variety of industrial uses as well for silver. And I know that's why a lot of investors like it, and they tell themselves at one point, if this metal is being used in such a variety of applications, it's got to take off. It's certainly not going to go down in value. And I tend to agree. I think silver is undervalued. I think it should be included in every precious metals portfolio because it has its moments. And that's what I want to ask you about next. For the past 4 or 5 years, silver, like gold, has been stuck in the mud. The price has just been languishing a little bit. Some investors that we speak to have become discouraged about owning silver, and they feel like they've waited too long and they haven't got a return on their investment. But has the argument now changed for owning silver, given where we are in the cycle, given the fact that gold is pushing up to, I think we touched a 7-year high last week for gold? have things changed, and has that argument for owning silver now changed, where it's not just about the industrial uses and the historical monetary uses, but now it's like, hey, there's a good chance this is going to go to 20, 25, who knows, $40, $50 an ounce. What are your thoughts on silver's kind of outlook for the next 2 or 3 years?
Well, it's very positive, but I think things have definitely changed. I mean, if you go, someone my age, I mean, silver was actually part of the money supply, even though it wasn't official, but you still had silver coins up through 1964. So, as an 11-year-old kid, you'd have, silver dimes and quarters, and then 65 on, obviously you didn't. So the idea in the early 70s, when the bull market started for the precious metals, I mean, it's only been about 5 years or so since silver wasn't really in circulation. So the idea that silver was money was pretty much imprinted either consciously or subconsciously in most of the American population. That's not true anymore. Everyone's been pretty much brainwashed that silver is not money. It's an industrial commodity only. And that's why it trades the way it does and has for the last few years, as you outlined, because basically everyone thinks that it's an industrial commodity, and most commodities are squeezed down to basically their cost of production, which in most mines, 18, 17, they're barely making it. And many that could be viable at, $25 silver aren't mining because they can't. They need a higher silver price for the mine to be economic. So that's part of it. The other part, I think, is the psychology of a silver investor is somewhat different than a gold investor. Now, many gold investors own both, and some silver investors don't own gold, but most precious metals investors own both. But I'm going to divide it a little bit, that the people that favor silver over gold are usually bigger risk takers. And these people were very disappointed by the market. And a lot of them, especially the younger set, moved into the cryptos. I think some of them moved out of silver and into the cryptos, never to come back to silver. And that's fine. I mean, I'm free market. If that's what you want to do, do it. So for silver to catch a bid monetarily, I believe it's going to take gold's further movement. And I slightly disagree with you, Mark, that, I think you said they're both kind of stuck in the mud. And, relative to where they were in 2011, yes, but gold's been performing quite well. And gold has outperformed silver for quite some time now. And in a true bull market, especially near the end, silver will outperform gold. And looking out 3 or 4 years, I still believe that's the case. But I think we need to get to that magic line in the sand, and I don't know where it is. But 2 things will happen. One is monetary demand for gold will continue to increase. And once that run to gold establishes itself beyond where it is right now, there'll be a run to silver for safe haven status, because it does provide it, just not to the extent that people think about in the gold realm. So central banks own gold. I mean, central banks haven't owned silver as a monetary reserve for a very, very long time. If they did, it'd have to be a factor of like 1,000 from what they own right now. And they don't really count it as a monetary reserve. It's just the amount that they own. So if silver were ever used as a monetary reserve, like say Mexico decided that they would have use the silver libertad in addition to the peso, and the Mexican government said that's the way it's going to be, then the citizenry of Mexico might just start using silver as their savings. And all of a sudden you've got, 100 million ounces per year that don't come into the market. They're held for monetary reserves, not necessarily by the bank, but by the people themselves. So, if something like that were to occur, and I'm not saying it would, but if something like that were to occur, you definitely dynamically shift the silver market in a very, very dramatic way. Plus, you'd also have the psychology with the potential change. It's, wait a minute, silver is money, or can be money, or at least a store of value, which is kind of where the palladium market is. I mean, no one thinks that palladium is money, but everyone that follows the metals at all, knows that the palladium market's gone from, 600 to 2,400. So I think that answered it. Was there another part to that I missed?
No, I think you covered it. You mentioned palladium, David, and, I've asked a number of my guests this questions, and it's not their fault for not having an answer, because a lot of people just don't follow palladium closely enough. It's a metal that we've ignored for the longest time, or most people have ignored for the longest time. We recommend it to our clients time and time again. They ignore the recommendation. Do you have any thoughts on palladium? We're somewhere around 24.50 bid today on palladium. We've seen it gather, strength all the way up to near $3,000 an ounce. I remember when I used to trade for $400 an ounce when I started.
Yeah.
You think
No,
this runs?
I was actually, for the Morgan Report, members, the private people, I actually put on a Palladium recommendation.
Yeah.
Had a very good time. Unfortunately, I got out personally too early, and that's not what I teach. I basically teach once you're in and it's moving your direction, just use like a 15% trailing stop.
Mm-hmm.
And I'm sure a few of my members have probably done that. So, no, right now, I think it's probably topped. Is this the ultimate top or not? I don't know. I think it could be basis where we are globally. I mean, the auto industry is getting decimated due to this virus and all the supply chain things. And will it come back very strongly or not remains to be determined. But I think we may be. Plus, one of the speculative stocks that I have on the Morgan Report, we just did a interview with them yesterday. It was free. And then I send it out to our free mailing list for a whopping $10, which if that's too much money for you, you're probably really not an investor. But let's get the name of the company. I interviewed the CEO, and it's a unique way to invest in the palladium and within the platinum group metals, because basically they're recycling catalytic converters. And what's interesting is that the market cap of the stock is something like 40 million. And after the facility is up to full capacity, forward-looking statement, disclaimer, I own this company, was 250 million. So you're looking at rounded up to 50 million market cap. You're still looking at 5 times the whole market cap of the company once they get enough feed, which I asked that question. There's the answer in the video. So that's a 5-bagger, let's say, just based on revenue, which usually you get a multiple. I mean, you usually get like a P of 10, right, or whatever. The point being that it's very, very undervalued. But the chance of this stock going up 5-fold is a lot greater than palladium going up 5-fold.
Right. Yeah.
And that's why I did this update webinar, is because I want people to know, if you're thinking, and I don't want to use too many metaphors, especially about myself, but the point is there are opportunities. You just have to find them. So if you really think you can miss the palladium mark, the answer is you probably did. But there is a way to invest in it and still, make maybe even a better gain than you do in the palladium market if you were lucky enough to get in at 500, So just mention that, Mark, because the resource sector is fascinating to me, and it always has been. I mean, the old adage that if it can't be grown, it has to be mined. I mean, everything comes from the land base. Either grow something in the soil on the land, or you dig under and get out what you need for the world at any point, but the modern world, especially with, all these exotics, the PGMs and the rare earths and everything else that's going on in our modern society.
Mm-hmm. So, David, if people want to find out the name of that company that's in the catalytic converter recycling business, and or subscribe to your report, the Morgan Report, which has been around a long time, and I know a lot of people personally who subscribe or follow you, where can they go to do that?
Yeah, well, let's just go to themorganreport.com and get on our free email list. As far as the webinar is concerned, the first one was free, so they did get the name of the company, whatever. It's been on inside the paid subscribers for a long time, but it's basically a freebie. And then, like I said, the replay, I think I'll send it out for $10 for everybody. I have to pay for the server and everything else. But the point is, so for $10, you get the name of this company and listening to the CEO and I have a discussion, and others that were on the call ask questions, which I, asked, live at the time. So it's all recorded. And then, of course, if you're a paid member, all those type of interviews get put in the, in the private part of the website. So you don't have to sweat, being live or whatever. I always put those up for the paid members. But something I've kind of tried a few times. I very seldom give the junior picks to the public at large, but I thought I'd do it in this case. It's sort of a, plus it goes on a record. I mean, anyone that watches that video will say, oh my goodness, I didn't know about this company, or I didn't know they were doing this, or I didn't know it was that, that potentially lucrative to recycle catalytic converters or whatever. So that's it. The best thing about being on the free list is when I do these free webinars, you will get notified. And on top of that, I do a weekly perspective every week, Mark, as you know. And that means I do a wrap up on the total financial markets. And I usually have something to say about the precious metals at the end. And I always try to keep it about 15 minutes or less so that, you know, it's one of those quick listens. You get kind of my take, and it's all verifiable. I look at the real news, and sometimes it's really big sources like Bloomberg or Reuters or Financial Times, whatever, but these are stories that are usually buried that you have to look for, but a lot of them are very pertinent to the current conditions.
Yeah, well, David, I think to close, I think the timing for investors, people who are following us here on the YouTube channel, you know, if they don't already subscribe to a newsletter or have a place to find this kind of news that you're mentioning that is important that they read, I think the timing to go out and consider signing up for your newsletter is very good, because my personal outlook for the precious metals over the next 3 to 4 years is that we're just entering a bull market. It's going to be a very interesting time. Educating yourselves now is, you know, could not necessarily going to make you a small fortune, but could be very valuable in your personal wealth. So, David, I want to thank you for your time, you know, sharing your thoughts. You're a legend in the industry, been around forever. But I know there's more to the story. And so I do encourage people to follow you either on Twitter, to go and find the Morgan Report and sign up for that. Thank you again, David, and I look forward to seeing you again or speaking to you again soon.
Great. Well, thank you so much, Mark. I did appreciate it.